This video is sponsored by Empower. It's this cool app that can help you save and budget your money. Download the app for free. Link is down in the description below. What is going on, you guys? Welcome back to another video. Today we are going to be talking about 3 stocks to buy going into the month of March. Honestly, the best investment that any of you guys can make in March is to just take all of your money and bet it on the Duke Blue Devils to take home the March Madness basketball tournament. I'm totally joking there, guys, but I did want to start this video off by just thanking you guys. Thank you to everyone that participated in last month's giveaway. The winner, and congratulations, is On the Road Fishing and Adventuring. So congratulations to you, man. You've been a longtime supporter of the channel, and I really do appreciate that. And I apologize to everybody else that wasn't selected. There's a lot of comments and only one winner, but we will be doing it again. So if you're interested in getting a free year or an annual membership to our membership group, all you have to do is comment down below and give this video a like. The winner will be announced on next month's stocks to buy. But for today's video, let's get right on into things. The first stock that we're going to be talking about is the Canadian oil and gas company Suncor, ticker SU. And this stock actually trades on both the Canadian and the US exchanges, so it's good for both of my viewers on either side of the border. And you may have heard of this stock in the news lately because Warren Buffett and Berkshire Hathaway did take a position into Suncor. This was a new position for them, a small one at that. And that's not, of course, the sole reason why I think it's a good stock to buy. Suncor is actually one of my favorite options here in Canada to get exposure to the energy space. But we do just have to mention that when we're investing in the energy sector or the resource sector, by nature, this is a cyclical sector. In other words, it would fall towards the higher end of the risk spectrum. We should expect to see a little more volatility when we're investing in these assets. That being said, I do think that when you look at your portfolio as a whole, kind of like an overall well-balanced portfolio, there should be some exposure to the resource sector, whether that be through a company like Suncor, Husky Energy, ExxonMobil, you name it. But what do I like about the company Suncor is that taking a look at their 5-year chart here, you may see these drops and be like, what a crappy company. This stock's not going anywhere. Well, this performance, of course, is very closely tied to the price of oil. And this right here is a 5-year chart of WTI crude. We see a very, very similar pattern. Of course, we saw oil prices crashing back in 2014 and then again as of late 2018. Now, oil prices as of recently have really started to pick back up, right? We're starting to see hopefully some stabilization here. If you've been following along with our weekly reviews that we do every week, we've been seeing oil climbing week after week after week, just coming off of those lows. Now, despite oil prices declining, Suncor, from an operational standpoint, has actually performed quite well. They have a project over in Alberta, the Fort Hills oil sands, which they expect to have about a 40 to 50 year life expectancy on that project. And this is just an example, one of examples of how, despite the underlying commodity being super volatile, the price of oil, they're able to drive steady cash flow for many, many years to come. We did just have news come out a couple weeks back. This was as of February 5th. The board of directors have approved a quarterly dividend of 42 cents per share. This represents a 17% increase over the prior quarter and marks the 17th year of consecutive annualized dividend increases. On top of that, they also approved additions to their share buyback program. So it just goes to show how well the company's managing their numbers. And as oil prices continue to come off those lows and they start to kind of pick back up again, we should expect some good performance out of the company Suncor. And of course, it never hurts when Buffett's out buying the stock. The stock currently trades for $45 Canadian. Like I said, there is a US version as well. It pays a 3.73% dividend, and Suncor is our first stock to buy in March. Moving on to the second stock for today's video, it is the video game company EA Sports. Electronic Arts, ticker of course is EA, and it trades on the NASDAQ.
EA Sports. In the game.
And if you guys have been following the channel for a while now, You guys already know my stance on the video game space. I think that the potential is just massive when you look at the growth of esports. We will be taking a look at a couple numbers in just a second, but let's start the segment off by just taking a look at the performance of some of the major video game players, because as of recently, they have hit a very rough patch. EA saw a big drop in 2018, coming off a high of about $145. Now, they have recovered since. They've actually been performing very well, and I did actually buy the stock on this dip. You can check out our membership group if you're interested in buys like this. Along with Activision Blizzard, now this stock basically fell off of a cliff, and Take-Two Gaming as well is down about 30% off of its 2018 highs. This has come off the combination of both some lackluster, kind of like some poor guidance numbers going forward. The entire video game sector, kind of across the board, are expecting lower revenue numbers, at least in the short term, based on their forecasts, along with a couple of the games being absolute flops. And highlighting EA, for example, Battlefield 5, one of their flagship games, this was an absolute bust. The official game reveal trailer, which was released on YouTube, I believe set a record for one of the most disliked reveals of all time. And if you're interested, like just a fun video on the side, PewDiePie actually did cover this topic pretty well. He basically went on to talk about how the marketing team did a terrible job with their strategy for this game, trying to push more of like a social agenda, kind of trying to include like the women's rights and whatnot, including here a woman with a robotic arm in the trailer, which got a lot of backlash. It was really just an interesting decision by management, and I will include this video down below if you got some time to kill and you want to check it out. Regardless, from time to time, games do flop, Battlefield being a prime example of this, and it definitely has had a negative impact on the company Electronic Arts. But we see this with movies. You get a bad movie here and there, a bad game from one of these companies, but that doesn't define the overall success of this company. EA is still the company behind some of the most successful gaming franchises such as FIFA, Madden, The Sims, and of course their newest game, Apex Legends. Unless you've been living under a rock, or maybe you're an older viewer, which will give you a pass on this one. This is their new free-to-play game that has been on fire as of recent. It racked up over 25 million players in the first week. Now, don't get me wrong, I'm not trying to say that this is gonna overrun Fortnite, but it has seen some great early success, and it's nice to see that they're showing some adaptability by getting into these free-to-play games, which seems to be a very successful gaming model. But really, for me, where the bread and butter lies with this company is without a doubt in their sports series. So like I said, FIFA, NHL, Madden, but FIFA in particular, like this is a game that they can rely on year after year to bring in sales and drive revenue. If you're a soccer player from Canada, from Europe, from Mexico, you name it, you're playing FIFA. They partnered up with E-League to host the FIFA E-World Cup 2019. It actually kicks off on February 22nd, so it might be on right now as you're watching, depending when you're watching this video. But these events are massive for bringing awareness to the brand, for pulling in advertisement dollars and sponsorship deals. If you haven't got the chance to check out one of these events, I'd highly suggest that you do, just to get a grasp of how legitimate this space is, or how legitimate the potential is for the esports space. The esports audience as of 2019 is totaling somewhere along the lines of 454 million viewers. That's up 15% from the prior year. They're projecting that by 2020, those numbers will be up to over 600 million. So you can see why companies are so enthusiastic to get involved with sponsorships and deals. This will actually be the first year that revenues break that $1 billion mark. So without a doubt, this is a space that I do want to be in. Personally, as a gamer myself, I prefer Activision Blizzard games. That's what I find myself playing the most. But the fact that EA has all of these sports titles under their name, that's ultimately this evergreen niche that they have captured that, like I said, year after year, sports fans are just going to buy the new FIFA or the new NHL or the new Madden. And as we looked at with the charts earlier, EA, Activision, and Take-Two have all dropped pretty significant amounts. And I think that now is actually a good time to start picking up some of these stocks. They all have their unique angles on the video game sector, but I am bullish for all three of these companies over the long term. The stock currently trades at $96 USD. It does not pay a dividend, and I will just note that after a really strong run-up that we've seen, I'd personally be monitoring it over the next little while. Maybe expect some sort of pullback, but if the stock dropped down to the $80, $90 range, I think that it might be a good stock to buy. So EA is our second stock to buy in March. But moving on to our third and final stock for the video, it's a classic. It's Coca-Cola, ticker KO. And the stock actually did drop about 10% last week when they reported their earnings. The numbers that they put out were actually decent, but where investors were unhappy was clearly about the guidance that they set going forward. Now, why do I think that Coca-Cola is a good stock to buy? Well, first of all, I personally think that Coca-Cola is a stock. It's a stock that I'd be comfortable holding pretty much at any time. And Coca-Cola was actually the first stock that I ever purchased, Coke and McDonald's. I plan to hold them for many, many years to come. But especially where we stand today, being in the later part of this cycle, everybody's talking about a recession coming, recession's here. Sooner or later it'll come, whether that's this year, whether that's next year. Maybe it's already starting, who knows? Stocks like Coke, defensive stocks, are great stocks to hold. They're not going to be shooting the lights out while the markets are pushing up, which they very well may for the next little while. They're not going to be posting 30% years, 40% years like some of these other growth stocks. But when the downturn does come, these dividend yielding blue chips that have been around for long, long times, these are the stocks that typically hold up fairly well. So especially where we stand today, just starting to get cautious. You guys already know that I am starting to kind of shift the weighting into some of these more defensive plays. I'm actually going to be adding some more bonds to my portfolio throughout the year, probably towards the latter half of the year. We'll see. But, after this 10% pullback, I think that this is a very nice time to buy the dip. Since the drop, the yield has now bumped up to 3.4%. This is a dividend aristocrat with 56 consecutive years of dividend increases. Very reliable company, and of course that's what you can expect when 1 out of every $4 spent on beverages, these are non-alcoholic beverages here, they're spent on some form of Coke product. It's the company Coca-Cola, for God's sake. The stock currently trades at $45 USD. Like I said, it pays a 3.4% dividend, and Coca-Cola is our third stock to buy in March. So guys, those are my 3 stocks for the video. What do you think of my picks for this month? You like them? You don't like them? Leave a comment down below. I do own two out of the 3 stocks that we talked about today. If you want to see the rest of my portfolio, you can do so by joining our membership group. If not, good luck to everybody that's going to partake in the giveaway. Like I said, it's as simple as just dropping a like and leaving a comment down below. But if you enjoyed the video, give it a like anyways. And if you're not already subscribed to the channel, I post a video every Monday. We do a weekly review every Saturday or Friday and a lot of extra bonus videos. So be sure to subscribe and hit the bell for notifications. But as always, I thank you guys for watching. I hope you enjoyed, and I'll see you in the next video.